Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Circle Internet Group.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And before we get into today's stock, we just want to mention a really useful chart tool for investors and traders.
Yeah, definitely.
Right, so if you want help reading trading charts more clearly, you can check out VIP Algos through the link below in the description.
It's a TradingView indicator suite, right?
Exactly. It shows visual buy and sell chart alerts, trend direction tools, support and resistance zones, and take profit and stop loss planning areas.
And it works across a bunch of different markets.
Oh yeah, like stocks, forex, crypto, gold, indices, futures, and more. But, just remember, VIP Algos is an educational chart analysis tool only.
Right, so it is not financial advice.
Definitely not. It does not place trades for you, and it does not guarantee profits. Trading involves risk, so always manage your risk and do your own research.
And just a quick note, this is an affiliate link, so we may earn a commission if you use it at no extra cost to you.
Right. So, getting into Circle Internet Group today.
Yeah, so imagine holding, like, the absolute monopoly on the future of United States digital money.
Which is huge.
Right. You have the government's blessing. You have literally no direct competitors in your specific regulatory class.
But then you look at the stock.
Exactly. You look at the market, and it's punishing you by wiping out 76% of your value.
It's wide.
It is this bizarre paradox because when you pull up the quote, the stock is trading around $63 today.
Yeah.
At first glance, it looks like a completely broken chart. But then, you look at what happened on July 10th, 2026.
Right, the approval.
Yeah, Circle received final OCC approval to become the only licensed stablecoin national trust bank in the U.S.
And that word only carries like a tremendous amount of weight here.
Oh, absolutely.
Because the market right now is pricing this asset like a speculative tech play that, just missed its earnings.
Yeah, like it's just another hyped up stock.
Exactly. But the reality on the ground is that they just secured a massive government-sanctioned moat.
So it's basically a classic battle between short-term price panic and long-term structural value.
Yeah, and understanding the gap between those two things is where the real analysis happens.
Right, let's move into the wealth-building context.
Right.
Because for anyone looking at a multi-year horizon, the question isn't just about what the stock did today.
No, not at all.
It's really about whether this company fundamentally changes how the world operates.
And that distinction is crucial. When people hear stablecoin, they immediately lump it in with speculative crypto tokens.
Right, like meme coins or whatever.
Yeah, exactly. But Circle is not a speculative token. It is the underlying infrastructure.
Like the plumbing.
Yes, the financial plumbing. Think about the transition from physical mail to email back in the day.
Oh, that's a good comparison.
You'd invest in the individual emails, right? You invested in
Yeah.
the servers, the routing protocols.
The base layer.
Exactly, the base layer that made the entire network function. Circle represents that base layer for the digitization of global finance.
I hear that, but I have to play the skeptic for a second here.
Go for it.
Because I am looking at the risk metrics, and the beta on this stock is 2.30.
Yeah, it's high.
That means it is more than twice as volatile as the broader S&P 500.
True.
So for a company that is supposed to be the plumbing of the new financial system, that is a wildly unstable pipe,
It is all, yeah.
Is this genuinely a foundational infrastructure play, or is this just crypto volatility wearing a suit and tie?
Well, the volatility is undeniable, I'll give you that. But that high beta is really a reflection of its past life.
Okay, what do you mean?
It's the broader sentiment around anything remotely crypto adjacent. And this is exactly where the new OCC federal charter changes the narrative.
Right, the July 10th approval.
Yeah. Before July 10th, Circle had to operate on this messy patchwork of state-by-state money transmitter licenses.
Oh, right, so they had to deal with every single state's rules separately.
Exactly. It was a complete compliance nightmare. But now, they have a federal moat.
So they have one unified set of federal rules.
Yes. And think about a central bank in Europe or, a massive sovereign wealth fund in the Middle East.
Okay.
They are simply not going to run billions of dollars in cross-border settlements through an unregulated offshore entity.
Well, no, of course not.
Their internal bylaws literally prohibit it. They require federal oversight.
Yeah.
So by becoming a federally chartered trust bank, Circle unlocks that institutional tier.
So it shifts the target demographic entirely.
100%.
They're moving away from the retail day trader and pivoting toward the world's largest financial institutions.
Right, because the big money needs a safe harbor.
And Circle just got the official government stamp of approval to be that harbor.
Precisely. It just takes time for the market algorithms and the institutional analysts to physically update their models and reprice that fundamental shift.
That gives us the bigger picture. Now let's look at the fundamentals.
And honestly, the fundamentals here are a tale of two extremes.
Yeah, they really are. Let's start with the top line numbers because they are staggering.
They're huge.
Revenue growth on a trailing 12-month basis is an absolutely massive 51.46% year over year.
Which is incredible.
For a company with a market cap of roughly $15.66 billion, maintaining that kind of growth rate is remarkable.
And, they are doing it with solid margins at the top, too. Gross margins are sitting at a very healthy 39.81%.
That's great.
Yeah. And when you factor in the 5.47 price-to-sales ratio, you are looking at a valuation that is quite reasonable for a business growing its top line at over 50%.
Okay, so they are bringing in cash hand over fist. The gross margins look solid.
Right.
But then I look at the bottom line, and it's just a bloodbath.
Yeah, the bottom line is rough.
The earnings per share, the EPS, is deeply negative at negative 2.91.
Yep.
And the net margin is negative 2.76%. I mean, at that rate, I should start a bank just to learn how to lose money that efficiently.
It looks bad on paper, I agree.
Help me understand this cash burn, because it feels like they are building a massive toll road, spending billions on the land, the concrete, the legal fees, the toll booths.
Right, before a single car is even driven on it.
Exactly.
Actually, that toll road analogy is the perfect way to visualize their balance sheet right now.
Okay, how so?
Because in this case, the highway they're building is the regulatory licensing and the compliance infrastructure.
Which is not cheap.
No, building a federally compliant banking architecture from scratch is astronomically expensive. You have to hire specialized legal teams, set up required capital reserves, endure constant regulatory audits.
So those are massive front-loaded costs.
Exactly.
But the theory is that those costs don't repeat forever.
Right. Once the OCC approval is finalized, which it is now, that heavy lifting is largely done. The highway is built.
Which means the capital expenditure should start to drop off, or at least stabilize.
Yep. And from here on out, as more traffic drives on that road, meaning as the total circulation of USDC stablecoins increases, the operating leverage flips.
Because the costs to maintain that regulatory highway is relatively fixed.
Exactly. But the revenue from every new $1 billion passing through their system drops almost entirely to the bottom line.
That makes sense.
That is the inflection point where net income should theoretically turn positive.
That brings us to the catalyst timeline.
Right, because we need to know when those tolls actually start paying off.
Yeah, exactly. And we have some major events lined up over the next few months that could dictate whether this company actually starts turning a profit.
The first major test is coming up very soon, in August 2026, with their Q2 earnings report.
Okay, so this month.
Yeah. This will be the market's first look at their revenue trajectory right around that OCC approval window.
What are we specifically listening for in that report?
We will be listening closely to management's commentary on the institutional custody pipeline. We need to hear if major banks are actually lining up to use the service now that it's federally chartered.
Okay, and then moving into Q3 2026, we have the actual operational launch of the Circle National Trust Bank.
Yes, and this isn't just a ceremonial ribbon cutting, right?
Right. This fundamentally changes their business model.
Exactly. It unlocks brand new custody and trust revenue streams. Previously, they could really only facilitate the movement of stablecoins.
Just the transacting part.
Yeah. But now, as a trust bank, they can charge institutional fees for holding assets, managing corporate treasuries, and providing bespoke settlement services.
Services they legally couldn't offer a year ago.
Exactly.
And then we get to September 2026, which is where things get really interesting for the macro analysts.
Oh, definitely.
We have the FOMC meeting with the newly confirmed Federal Reserve Chair, Kevin Warsh.
Right.
Now, for anyone wondering how the Federal Reserve directly impacts a private stablecoin company's bottom line, we have to look at the underlying mechanics of how Circle makes its money.
Because this is the hidden engine of their entire operation.
Walk us through it.
So when you give Circle one real US dollar, they mint one USDC stablecoin for you to use on the blockchain.
Right.
But they don't just put your real dollar in a mattress.
Yeah.
They take those billions of dollars in reserves and park them primarily in short-term U.S. Treasuries.
And treasuries pay yield.
Exactly.
So Circle is sitting on billions of dollars of collateral, earning a massive interest rate on it, and keeping that yield as pure profit.
Yep. Every $1 billion increase in USDC supply brings in a massive chunk of incremental interest revenue.
So the rate policy set by Kevin Warsh and the Fed dictates how much interest they earn.
Precisely. If the Fed keeps interest rates high, Circle essentially prints money just by holding the collateral.
But if rates drop?
Their margins compress instantly.
Wow. But hold on, if we look back at the OCC approval on July 10th, the stock surged 12% on that single announcement day.
Yeah, we had a nice pop.
I have to ask, isn't the good news already priced in? Like, did everyone who wanted to buy on the banking charter already buy?
Well, we have to separate headline pricing from fundamental pricing.
Okay, explain that.
The immediate psychological relief, the confirmation that they actually got the approval, is absolutely priced in. That was the 12% jump you saw.
Right.
But the operational revenue, the actual cash flows from those new custody services and trust fees launching in Q3 is not fully realized yet.
Because the market generally refuses to fully price in earnings that haven't actually hit the income statement.
Exactly. Catalysts tell us what could change the story. Now let's pivot to the chart.
Yeah, let's look at the actual damage on the chart.
It's rough.
We are looking at a current price of $63, down roughly 4.75% on the day.
Yeah.
We are in a deep, agonizing correction, trading 76% below the all-time high of 262.97.
For anyone who bought at the top, that is a very tough pill to swallow.
It requires a lot of conviction to hold through a drawdown like that.
It really does. But if we are building the bullish case, we have to look for a structural floor.
Okay, where are you seeing that floor?
In February 2026, the stock hit a low of 49.90. It bounced off that level aggressively, and currently it's trading about 26% above that floor.
So we are potentially looking at a double bottom base forming.
Exactly. And what makes that interesting isn't just the shape on the chart, but the human behavior behind it.
Right, because you pointed out earlier that the trading volume is expanding.
Yeah, it's running at about 1.3 times the 3-month average.
While the 5-day return is a relatively muted negative 3.3%.
And that combination is highly revealing.
Why is that?
When a stock is down 76% and suddenly you see higher trading volume but the price isn't collapsing further, it tells us a lot about market psychology.
It suggests seller exhaustion.
Exactly. The people who wanted to panic sell have already sold.
Right. Now, buyers are stepping in at these lower levels and quietly absorbing the remaining supply without letting the price crater.
Yep.
Of course, trying to catch a falling knife in a deep correction like this is inherently risky.
Extremely risky.
You never know if that 49.9Z floor is made of concrete or if it's a trap door.
Which is exactly why traders often rely on having a really clean chart workflow to visualize where the true support and resistance zones are.
Right, it takes the emotion out of the process.
Exactly. And that seamlessly ties into why some people use educational resources like VIP Algos to map those technical realities clearly, rather than just guessing.
Removing emotion is half the battle when a chart looks this chaotic.
You want data, not gut feelings.
So the chart gives us price structure. But what does market sentiment look like?
Well, the mood among analysts and institutions is moderately bullish, though cautiously so.
Okay, like who?
Take Baird, for example.
Yeah.
They just maintained their outperform rating on the stock, but they cut their price target pretty significantly.
How much?
They moved it from 138 down to 100.
Oh, wow. That is a fascinating dynamic. The analyst cuts the price target by almost $40, acknowledging the near-term headwinds, but still says the stock will outperform the market. And honestly, even at that lowered, more conservative target of $100, we are sitting at 63 right now.
Yeah.
That still implies roughly a 59% upside from current levels.
It's a valuation haircut, certainly. But the core institutional conviction remains intact.
Yeah.
We are also seeing specific whale alerts in the broader IT sector that suggest some quiet, behind-the-scenes institutional accumulation is happening right now.
Okay, but we have to address the elephant in the room regarding sentiment.
The insiders.
Yes, I am looking at the insider transactions, and at first glance, it is a massive red flag.
Oh, it's scary, yeah.
Insiders have sold over 2 million net shares in the last 90 days. We're talking 37 buys against 145 sells.
Right.
Now, I see these insiders dumping, but given they just came off their initial lockup period, this looks like standard IPO decompression to me.
Exactly.
Like, people finally buying a house or diversifying their portfolios after 5 years of having their net worth locked up in one company, rather than executives abandoning a sinking ship. Are you seeing it the same way?
That is exactly the right context to apply.
Okay.
Because when a company goes public, the early investors, venture capitalists, and long-term employees literally cannot sell their shares for a specific lockup period.
They're legally blocked.
Exactly. So when that window finally opens, you naturally see a flood of selling.
Right.
It creates a ton of technical overhead on the chart, which acts as this heavy blanket driving the price down temporarily, but it does not inherently mean the fundamental business thesis is broken.
So it is a mechanical sell-off, not necessarily an ideological one.
Exactly. That sentiment picture is useful, but we still need to talk about the risks.
Yeah, because we always have to look at the bear case. Nothing in the market is a sure thing.
Definitely not. Let's zero in on the macro risks first.
We just talked about how Circle makes its money by earning yield on its treasury reserves.
Right.
If the economy slows down and Kevin Warsh decides the Fed needs to cut rates aggressively to stimulate growth, the yield on Circle's massive reserve pile drops.
And that hits their main revenue engine incredibly hard.
Yeah.
It is a severe structural vulnerability. If we enter an environment where rates go back down near zero, their biggest cash cow essentially dries up overnight.
Forcing them to rely entirely on those unproven custody and trust fees.
Exactly. Then there is the sector weakness to consider.
Right. The broader market right now is absolutely punishing the recent IPO cohort.
Oh, completely.
Look at companies like Figma, SpaceX, or SK Hynix. They are all dragging heavily.
Yeah, and Circle's getting pulled down with that tide.
Suffering from guilt by association, basically, regardless of their individual success with the OCC.
The market is currently treating all newly public, high-growth names as risky assets to be liquidated.
Just dumping them.
Yeah. Until that macro rotation changes, Circle will face strong macro headwinds.
And finally, we have plain and simple execution risk.
The toll road.
Exactly. Building a federally chartered bank is unbelievably expensive.
Unbelievably.
But what if they build this beautiful compliant highway and nobody drives on it?
That's the fear.
What if traditional institutional clients look at it and decide they don't actually want or need to adopt USDC for their cross-border settlement?
That is the ultimate existential risk.
Yeah.
If the institutional adoption stalls out, the massive ongoing cash burn required to run a highly regulated federal bank will absolutely crush their balance sheet.
Right, because the compliance costs, the legal retainers, the capital requirements, those don't go away just because your revenue is light. So with everything on the table, what's the final verdict?
Based on the data, the final investment rating here is a bullish score of 7 out of 10.
Okay, a 7.
Fundamentally, this is a contrarian opportunity at current levels. It is speculative, yes, but it is structurally sound.
So what kind of timeline and what kind of investor does this actually make sense for?
It requires a solid 6 to 12-month horizon. You have to give the company enough time for the OCC bank launch in Q3 to actually operationalize and, translate into reported earnings on the balance sheet.
That makes sense.
This is an asymmetric opportunity designed for long-term investors who are willing to stomach post-IPO volatility.
Right.
However, if you're an investor who is highly sensitive to insider selling overhangs, or you easily get spooked by aggressive price swings in high beta assets, you should tread very carefully here.
And a quick reminder to everyone listening, this analysis is strictly educational.
Yes, very important.
This is not financial advice. We aren't telling you to buy, sell, or hold any security, and you must always manage your own risk in the markets.
Knowledge is your best asset, but you always have to pull the trigger on your own research.
And if you want a cleaner way to read trading charts and identify those support zones we talked about, check out VIP Algos through the link below in the description.
That's a great tool.
It's a TradingView indicator suite with visual buy and sell alerts, trend direction tools, support and resistance zones, and TP and SL planning areas.
Really helpful for mapping things out.
It can help make charts easier to scan, but remember, it is still only an educational chart analysis tool.
Right.
It is not financial advice, it does not place trades for you, and it does not guarantee results. Trading involves risk, so always do your own research and manage your risk. This is an affiliate link, and we may earn a commission at no extra cost to you.
And if this analysis helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua Talk.
But before we go, just think back to that toll road we talked about earlier.
Yeah.
We've spent decades watching the physical infrastructure of the world get built. The interstate highways, the cell towers, the transatlantic fiber optic cables.
And now,
Now we are watching the foundational infrastructure of digital money being poured in real time.
That's fascinating.
Whether Circle ultimately becomes the central highway that the world's institutional wealth travels on, or just an expensive, abandoned back road, is the billion-dollar question.
Definitely something to keep an eye on.